Welcome to today's Retirees with Wayne Maslick, Certified Financial Planner, a program designed to educate you on family-focused retirement and tax planning. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management and Alan Thorley Deloitte Insurance.
Welcome to this edition of today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. Wayne, tax season for this year is sort of behind us.
For most people.
For most folks. I was talking to a guy the other day. He went and filed his extension on the day that that he should have filed his tax.
You'd be surprised how many people file extensions.
You know,
yeah, quite a bit.
It is, but we're not talking about tax.
No, not today.
We spent a couple of programs talking about taxes and tax strategies and those kinds of great things. Today we're going to be talking about something that all of us love to talk about. And that's life insurance.
Yeah, life insurance actually in the scenarios we're going to use is going to be in a positive manner because it's the opposite of paying tax. It's one of the only tax-free vehicles out there if you use it properly.
Really?
Completely tax-free. I mean, no tax.
No tax whatsoever?
No tax whatsoever, whoever cashes the check, if it's done right.
Okay.
So we're going to talk about that. It's one way, a lot of people in their retirement years can benefit from applying strategies using life insurance.
So
and that's what we're going to talk about today.
A lot of folks, when they get to, the old scenario that I'm familiar with is, you buy a term policy for 10 or 15 or 20 years, whatever that number is, and you protect your spouse and your children and your assets.
For mortgage, pay off the mortgage,
right,
or pay for the kids' college if you die early.
Right.
Which is, that's one of the uses of it. But that's not what we're going to talk about today.
So there's, and I think that's the scenario that most folks are familiar with.
Most, and ironically, most of those term policies, they never get paid out. I mean, like less than 1.5% of those issued ever get paid.
Sure.
That's why they're so cheap, because most people are still living after the 10 or 15 or 20 years. Interestingly though, I just talked to an attorney that I work with, I think yesterday actually, and we've been managing a trust for 2 kids that was funded with life insurance because the mom passed away. So the mom wanted these life insurance funds to pay for these kids' college, and they're taking about 6 or 7 years to get through college, but they're going to graduate. They got like 1 more quarter to go, and that life insurance policy paid for 2 kids' college degrees.
Wow, great!
And it's just an inexpensive term policy.
Wow.
So but that's that's for younger folks. We're going to talk about insurance for older folks today.
Okay. So when we get into our 50s and 60s and beyond, most of us aren't thinking life insurance.
No. You're thinking saving money, not spending money on life insurance.
Right. And part of that reason is the horror stories we've heard from our neighbors is that it's so expensive that you can't afford it anyway.
Well, yeah, and those people probably shouldn't have the life insurance the way we're talking. We're talking about people that have saved, are sitting nice in retirement, and want to use life insurance for an estate planning strategy. Okay. Not to make sure their beneficiaries can survive if they die. This is the opposite. They have plenty of money, plenty of funds, and there's strategies you can use to improve your estate and lower your ultimate tax bill, and potentially pass all of your estate to your loved ones, not your estate minus taxes and other costs. So that's what we'll talk about today.
Okay. Now, the thing that jumps in my head when we're talking about this is the importance of someone calling someone like yourself, a certified financial planner. Not very many people that I know of know anything about this kind of a strategy.
No. It's very, most folks don't utilize some of the strategies and vehicles that are out there available to them because they don't know about it. They don't make the effort to sit and learn, to meet with someone like myself, to see how they can improve upon their estate and their financial plan. There's tax laws in the books for insurance that have made those products tax-free now for decades for a reason. And the reason is that the lawmakers don't want it gone because they're the ones that use this. You know, the wealthy, the business owners, the Congress people, you know, they utilize so much life insurance. The banks, the investment companies, they own so much life insurance. Bank-owned life insurance on executives is one of the you know, a lot of people don't know about it, but there's billions of dollars of life insurance owned out there. And one of the reasons is the tax benefits of it.
Wow. Didn't I mean, we've talked about it months ago about, you know, some of these basic things, but it's pretty important. Now, just before we take this first little break, and we'll come back, I think you're going to go to the board today. Yeah. And we're going to talk about these life insurance strategies. Tell me just in 30, 40 seconds how people need to contact you and what you can help them with in a 40-second commercial, if it were, if I can use that term. Most folks, you know, get introduced to me through our workshops that we do. I mean, monthly we do workshops at various restaurants. You may get invitations in the mail or see it on our website, or if you get our newsletter, we announce, you know, each month where the location is. It's generally on a topic that has to do with the stock markets and the economy, and we talk strategies in there. Very, very low key, no sales pitch, but they're in a group of people, some of which are my clients, that they could, you know, talk to my clients and say, hey, how's this Wayne guy? And so it's very low key, very comfortable. And then when I'm done doing my dog and pony show, you know, folks eat dinner. And then if they want to schedule a time, they schedule a time. That's, a lot of people come to me that way. Or clients of mine bring friends or people they think should meet me and where I can help them. Sure. Other folks just call and come in, or go to the website and send an email that, hey, please call us, we'd like to schedule a time. Right. So for those folks who are getting on, you know, the 50, 60, 70-year-olds, and you have some concerns or you have some questions, I'm telling you folks, this is where you need advice. And the phrase, the quote that you've used many times is there's two tax laws in this country, and I forget. Well, one for the informed and one for the uninformed. Right. And some very key people had said, hey, those of the uninformed group, they will pay more taxes. Right. It's just, but not only that, not just taxes, but costs. I mean, if you're not informed, you're going to make mistakes, investment mistakes, financial planning mistakes, tax mistakes, then it's going to cost you or your loved ones money. So you need to get with somebody that, in my opinion, is a certified financial planner and independent. There are a lot of people that work for banks or brokerage firms, and, you know, most of them have an agenda or have people above them that they have to satisfy. Their managers or whatever, their bosses. So you want to meet with somebody that's going to have your best interest in mind, not the company's. Sure, absolutely. When we come back, we're going to take a break right here. When we come back, we are going to be talking about life insurance strategies and tax strategies using life insurance. Can I say that term? For later in life people that are retired or around that age, not for the young family. We're talking grandma and grandpa, kids are gone, you have grandkids maybe, and you want to maximize your estate and utilize your own assets for your benefit, and I'll show you how you can do that with life insurance. All right. We look forward to that. We'll be back right after this. This is Today's Retirees with Certified Financial Planner Wayne Maslick.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
Allen Thorley Deloitte Insurance has been locally owned and represented for over 100 years. That means if catastrophe happens, we've probably seen it, and we'll walk you through the process of making everything right again. Representing some of the finest insurance companies in the industry, Allen Thorley Deloitte shops for you, giving you the personalized service, advice, and coverage you deserve. Yes, it's really that simple. Let us customize a plan for your personal or business insurance needs at 800-628-1057 or visit atdinsurance.com.
Find out why Wayne Maslick Certified Financial Planner is the right choice for you.
Many do-it-yourselfers read and watch the financial shows, but when you look at the actual rate of return that they've earned on their investments, or when you look at the state of their estate plan, are the documents updated? Is everything in line? A lot of times it's not. So those folks, if they're not doing a great job themselves, they need to come in and see me. Call the office, talk to my staff.
Now back to today's retirees with Certified Financial Planner Wayne Maslick.
And welcome back to this edition of today's Retirees with Certified Financial Planner Wayne Maslick. Wayne, our topic today is life insurance strategies for retired folks or older folks.
Mm-hmm.
Where do we want to start? I mean, most people don't think of that strategy at all.
Right. Well, a couple of things I'd like to point out. And people with large retirement account balances. These are large IRA balances, 403B, 401K, 457 plans. You know, they've saved it in their profession or where they worked. They have a lot of money in these accounts that they've saved over the years, and they haven't paid tax on that money. Okay, so all that money in that account, they have an IOU to the IRS. They owe taxes. So whoever inherits that, their kids or whoever, there's a tax liability.
Okay.
That tax liability can be large. You know, the taxes are probably going up, but right now the largest tax bracket, the highest, is 35%. It's probably going to go back to the 39.6 or whatever here in a couple years. Plus you have state income tax, and in some cases you have state death tax. So that can be a 50% or more reduction in the tax on that account.
Wow.
So folks have to remember that. Not only that, at age 70 and a half, the government makes you take that money.
Okay.
Start taking it. Again, the government needs tax revenue. They want you to take that money. So let's say you have $500,000 in a retirement account. You're 70 and a half. The government's going to make you take about 4% of that out.
Okay.
Okay, so you're talking 20 grand. A lot of these folks don't need the 20 grand. You know, they're living on pensions and Social Security and whatever else.
Okay.
So now here's 20 grand. Got to pay the tax on it. What do you do with it? Well, you could either spend it, travel, do whatever. You can reinvest it.
Okay.
Or you can do what we're talking about today, which is leverage it.
Okay.
And we use those minimum distributions to fund life insurance. Generally, the life insurance is owned outside of their estate. Like we have a child own it, or what's called an irrevocable trust.
I see.
If it's owned outside of the estate, you're probably thinking, why would we want to do that? That keeps the estate tax out of there.
I see.
So as long as it's owned outside the estate, it's not includable in the estate when they pass away. It's completely estate tax free.
Okay.
And life insurance by nature is income tax free when it's paid out.
Oh,
so now we have an estate that is tax free, the portion of it that's in the life insurance.
Okay.
So again, folks are taking these minimum distributions, don't need them, don't want them because they're triggering taxes, but what do we do with them? Well, hey, we can turn around and get a tax-free estate started.
Okay.
You know, for $500,000 or $1 million, something like that. Again, depending on the age and health of the people. Normally we use what's called a last to die plan. So say it's on a husband and wife. So when the last one of them passes is when the actual payment goes to the beneficiaries.
Okay.
Again, tax-free.
Sure. Okay.
Now, this accomplishes a few things. One, that amount can be used to pay the tax on those IRAs that never have been paid. So you're kind of paying the tax for the kids. Another reason we do that is their own savings that they've saved. They could use it for themselves. A lot of people aren't going to use their life savings or you know, not use it as much as they could because they want to leave an inheritance to their kids or their grandkids or their nieces and nephews. Well, this way they can use that up or use a portion of it up, knowing that this injection of life insurance is going to replenish the estate at their death.
Okay. So I'm sitting here and I'm insurance company A, and I'm looking at, you know, Charlie over here, who's 72 years old. Life expectancy on Charlie is not that long anymore.
True.
So I'm going to insure him for $500,000. That's got to be really expensive because I know I'm going to be paying that out.
Yeah, I mean, at 70s, it's not too late. We do it, and we have 80-year-olds that get insured. But if you have money that is includable in a taxable estate that you don't need, and let's just say the premium is, just throw out a number, $10,000. So you pay $10,000, and now you have an instant estate of $500,000 or $750,000. You die in a year, well, that money gets paid out.
Right.
You live 10 years, well, yeah, you've paid in $200,000, but again, there's still $500,000 or $700,000, whatever that premium paid. Now, the younger you are, the more insurance you can buy. None of us know when we're going to go.
Right.
Okay? But what we do know is we're taking a portion, just a small portion, of your IRA retirement money, and we're creating a instant tax-free estate.
Okay.
And I'll try and do a little diagram on the board when we get back. Again, this isn't for everybody.
Right.
This is for somebody that wants to create an estate they don't have, or make the money that the government's making them take, make it work.
Sure.
Okay. We can also use this, I'll tell you when we get back, for charitable purposes. Some people want to leave a church or charitable organization a nice little inheritance or a nice little gift.
Sure.
Life insurance is a great way to do that. You know, you get this plan, this policy, you make your kids maybe the majority beneficiary, you put the church on or something for 25% or 50% or all of it, whatever the case. But it's a way where you can create an asset at your death, but not have to worry about using up your own life savings. You can use and enjoy it for yourself, knowing this influx is going to come at your death.
Right.
Just one, again, just a tool.
Right, and that's the key. I think what you're, you know, it's a tool. It's a way to do this differently for most of us than what we're thinking.
Yeah, it's an estate planning strategy. A lot of folks use it. A lot of wealthy people use this strategy because you know, anything that's in your estate potentially can be taxed. You know, state of Ohio death tax. Life insurance is exempt from state of Ohio, but it's not exempt from federal. We know that federal exemption is real high now based on what the law that just got changed. It's $5 million apiece, but we don't know what it's going to be down the road. You know, those Bush tax cuts were only extended for 2 years, so a lot of people feel that exemption of $5 million is going to come way back down.
Sure, sure. All right, we're going to take a little break right here. When we come back, we're going to go to the board and we'll try to put this in a little better diagram for you. For those of you that are watching, we'll try to explain it for you, those of you on the radio. We'll be back right after this.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
Allen Thorley Deloitte Insurance has been locally owned and represented for over 100 years. That means if catastrophe happens, we've probably seen it, and we'll walk you through the process of making everything right again. Representing some of the finest insurance companies in the industry, Allen Thorley Deloitte shops for you, giving you the personalized service, advice, and coverage you deserve. Yes, it's really that simple. Let us customize a plan for your personal or business insurance needs at 800-628-1057 or visit atdinsurance.com.
Find out why Wayne Maslick, Certified Financial Planner, is the right choice for you.
Then there's folks that need to come see me that maybe are a recent widow or widower and just need some help getting their financial house in order. Or there's folks working with current financial advisors or brokers, and maybe the brokers are taking too much of their money at risk, losing it to the stock market. So come see me, folks. Call the office and set a time that's comfortable and convenient for you. And
Now back to today's retirees with certified financial planner Wayne Maslick.
And welcome back to this edition of Today's Retirees with certified financial planner Wayne Maslick. Today we are talking about life insurance and life insurance for older folks. When we say older, we're talking 50 plus. Can I use that?
Yeah, 60 plus. People
Okay.
that generally the folks that are reaching retirement age, 60, 65.
And these are strategies for tax as well as estate planning.
Yeah, tax planning, tax replenishment, estate replenishment. If you look at the board, say you just have somebody that has a $500,000, it's a little smudge there, a little dripping ink, $500,000 retirement account. Again, they owe tax on that money. How the money gets withdrawn is going to depend on how much tax is paid. So you have a $500,000. Some people will have $1 million or $2, some will have 200,000, whatever the amount is. They say right now that only 1 in 7 Americans have saved at least $250,000 for retirement.
Oh, I don't doubt that a bit.
So we're talking about the people that have saved.
Right.
Yeah, this isn't for the people that haven't.
Right.
This is for the people that have the money and want to utilize the strategies available to them.
Mm-hmm.
So they have the money, they reach retirement here, and they're going to start to travel and enjoy retirement.
Mm-hmm.
Maybe go to Arizona in the winter, or go to Florida, buy a little vacation home,
Mm-hmm.
start using what they've saved.
Sure.
Okay. How much of it they use, we don't know. They may travel, a lot. They may spend a lot, help the grandkids, kids, who knows. So we don't know how much they're going to spend here, but they may spend more on themselves if they know this life insurance is coming back into the estate.
Okay, sure.
Because
All right.
it's going to replenish the estate. The other thing we don't know about is nursing home and other illnesses as we age.
Right.
That can cost and eat up a lot of our estate.
Mhm.
If you end up having a stroke or getting Alzheimer's, now this $500,000, you're going to have to start using that to pay for your nursing care. Not only that, as you pull the money out of that account, you're going to owe tax on it.
Sure.
So to pay the nursing home 60 grand, you may have to pull out 80 grand.
Right.
So this can be
Ouch.
used up. So by the time we pass away, we really don't know how much of that 500,000 in this case is going to be left.
Mm-hmm.
Okay? So that's when the life insurance replenishes the estate.
Okay.
Some people get $1 million worth of coverage, $2 million, 500,000, whatever suits their situation.
Okay.
Really depends on the size of their estate and what they could afford. So this comes back in, tax-free,
Okay.
no income tax,
None whatsoever.
0,
Wow.
no estate tax
Wow.
for state or federal, nothing,
Okay.
as long as it's owned properly. And again, owned outside of the estate.
Right.
Now, if we don't have any estate tax concern, we don't have to have it owned outside of the estate. The folks can own it themselves. So they pass away, and this comes in. How much of this is spent? We don't know. If they didn't spend any of it, just use the interest, well, now the 500 comes in. Now it's $1 million estate.
Right.
Okay.
Right.
So again, I'm talking generalities today.
Sure.
When I meet with folks, we get specific and see if this strategy works. This is a tool that people can use to benefit the family and their
Sure.
beneficiaries.
Now, what if on your life insurance the 500 out when you said outside the estate? I mean, is that you said it was owned by a child or
Yeah, a child, irrevocable trust.
Okay. All right. So
Yeah. So that's how we get the estate tax free. Life insurance by nature is income tax free already.
Okay.
The payout.
wow.
Yeah, it's a pretty cool tool. It's really beneficial for the estate. The negative to it is, of course, you have to pay these premiums.
Right.
But we use the required minimum distribution in a lot of cases
Right.
that the government makes you take to pay the bill anyway.
But if you pay, like you used the example a minute ago, if you pay $200,000 over 10 or 20 years, and there's a $750 or $1 million policy sitting there. Yeah, absolutely.
I mean, yeah, usually the internal rate of return, even if you live 30 years or more, is better than most investments you can get. Let's just say you do live long. It's still a good deal when you look at the math. And I can show people that if they have any interest, again, call or email, and I'll share the strategy with them.
Well, that's what I see, Wayne, is how important it is to pick up the phone, call you guys, look at the number on the screen, you know, go to your website, todaysretirees.com. All of these contact information is there.
Yeah.
And call Wayne and tell him, you know, you heard him talking about this and you want more information, you'd be happy to sit down with folks and sort of go through their plan with them, correct?
Yeah, absolutely.
All right. Well, we're going to be back right after this. This is Today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
If you would like Wayne to answer your question on the air, send your message to wayne@todaysretirees.com or call 866-626-3990. Here's today's question.
And our question today, Wayne, is what does something like this cost?
Well, again, that's going to vary based on the health of the folks and their age. But generally speaking, for someone in their early 60s, you can get $1 million worth of coverage for around $10,000 a year.
Per year.
$10,000, immediate $1 million estate. Again, I'm using round numbers. There's a lot of factors here. We like to use a guaranteed premium. So you don't want this plan to ever lapse.
Sure.
So those premiums are about those numbers. As long as you pay the premium, the policy will be enforced, even if you live to, we use the age like 125, believe it or not.
Wow.
So, not that you'll live that long. But this does work, and just, again, a great tax favorable strategy.
All right. Well, we are out of time again. Thanks for being with us. We'll see you again next time.
Thank you for being a part of Today's Retirees. We trust the information discussed on Today's Retirees has been a benefit to you. To schedule a no-cost or obligation appointment with Wayne, please call our office at 866-626-3990. A free newsletter is available by calling our office or visiting our website, todaysretirees.com. That's todaysretirees.com. Today's Retirees is a service of Great Lakes Benefits and Wealth Management, Wayne Maslick Certified Financial Planner, and is sponsored by Great Lakes Benefits and Wealth Management and Alan Thorley Deloitte Insurance. The information on Today's Retirees and information on our internet website should not be construed in any manner whatsoever as the receipt of or substitute for personalized individual advice from Wayne Maslick or Great Lakes Benefits and Wealth Management.